Good morning. Happy Tuesday. I am looking forward to touching our topics today. Today's topic is mortgage models, and more specifically, which mortgage model is going to thrive in the future? Which model will win? And we talk about mortgage models, we talk about a bank or a credit union, brokers, IMBs, or others. Which of these are going to win in the future? And what really got me thinking about this is last week at Mastermind's Summit conference, in the executive breakout, the VIP lunch, one of the questions given to the four-person panel was, which model is going to win in the future? And it was a great panel, and the answer will surprise you. And I'm going to give you the answer in a few minutes. But before we get to the answer, let's talk about some of the new models that are expanding or growing or coming into our space or going to have an impact on us. And understand, our industry is going through this massive transformation, this massive change, and so much so I'm hoping that maybe tomorrow I might talk about the new normal, what I think is the status quo and what's the new normal. But we're going through this massive change. And it's interesting to see how the different models are reacting to the change, how we're all leaning into the future and what we think that future will require. And so one of the things that caught my eye, yesterday I was reading Mike Delprete's newsletter, and it's the name of the newsletter is Turning Data into and Context into Meaning. And he has a really great data. I don't know where he gets it from. Some of it I haven't seen before. And then he wraps it around with a really good opinion or a really good analysis. And I get a lot out of Mike's newsletter. It's free. It mostly focuses on real estate, what's happening in real estate, the data that shows what's happening, which companies are growing the fastest, which ones are losing market share. And it's really interesting. So if you get a chance, check out Mike's newsletter, Turning Data into Meaning. I'm speaking to yesterday's, I'm just going to speak to yesterday's edition, which was Investing for Growth, Zillow and Redfin in Mortgage. That, of course, caught my attention and is part of the conversation we're going to have today. So if we think of the mortgage space and we think of the traditional players and then we think of new players, there's all sorts of companies that have tried to come into our space and haven't succeeded or haven't got a foothold yet, but they keep trying. I mean, we all remember worrying about Amazon Mortgage 10 years ago. And of course, that didn't happen. Or Apple Mortgage. Like, there's always a fear, but the fear is somewhat, justified because there are new players trying to get into our space. There's tech companies that occasionally try to come into our space. Peripheral entities want to build verticals. Think real estate companies. Real estate companies at the franchise level are by and large hemorrhaging cash. They're not making money. They need to find new revenue sources. One of the things they quickly gravitate towards are, gosh, we'll just start doing mortgages. We'll attach mortgages to our primary service, and that will give us revenue flow that will help our ailing revenue model. And real estate companies have tried this over and over and over again, mostly unsuccessful. Mortgages are hard. It's not something that you do as an afterthought. And then, of course, we always have these marketing company or internet companies, consumer direct companies. Now, consumer direct has a place in our business and it's successful in our industry, where they keep trying to extend into taking bigger and bigger market share. But in addressing Mike's newsletter yesterday, I want to talk about the entities that he brought up. And the one that he brought up, most significantly in his newsletter was Zillow, and how Zillow's performance over the last year or so. And we may find this surprising. I definitely found this surprising. But Zillow doubled its MLO headcount in the past 14 months. So it's doubled the amount of loan officers in just over a year. And that's that's vastly contrary to the rest of the industry. And not only did Zillow double its MLO headcount in the last 14 months, but it increased its origination volume by over 130% in the last 12 months. So it's doubled its headcount in 14 months, and it's increased its origination volume by over 130% in just 12 months. That is making a huge move in a down market. And you wonder what the end game is, right? Like, Zillow, why are you doing that? You have your other revenue streams. Is this, in alignment with what you're trying to do? And what entities, companies like Zillow and Redfin are trying to do is they're trying to attach mortgage services to its core brokerage operations in order to create a new or bigger revenue stream, similar to real estate companies. And so Zillow's going all in on mortgages, and they've been in this space, I want to say, for 4 or 5 years, and to not a lot of success yet, but they're a giant, they're a giant entity. They come with a lot of money, a lot of technology, a lot of bright people, and so it's something to pay attention to. In this past year, Zillow rolled out their mobile app called BuyAbility, and what BuyAbility is, it's essentially it's an app that will will walk a customer through a pre-qualification. Now, the borrower, as with all pre-qualifications, the borrower gives the app their information, and the app takes it at face value, and then the app tells it most likely what the borrower is qualified to buy. Now, the consumer or the borrower needs to give their income information, their asset information, an estimate of their credit score. As we know, most consumers don't really have a great grasp of these details, and what they believe is often far different than what they actually are experiencing. So, while the app may be inaccurate, especially around credit score, who can really guess their credit score? Especially when you get the free credit score sent to you, and it's not the one that we use in mortgage. But nevertheless, that they think that app is novel and will really drive consumers to their platform and assist consumers through their journey of finding a lender for mortgage. So BuyAbility, interesting thing that they've added to their platform. And so Zillow's, making this is like I think this is really like their third big charge into the mortgage space. The first two didn't end so well. We'll have to see how this one goes. And then, of course, Redfin. Mike brings up Redfin in his newsletter, and it's really interesting because Redfin acquired Bay Equity Homes in 2022, and so it acquired. Bay Equity was a fairly good-sized mortgage company. Redfin bought it. Tough timing there, Redfin, but they bought it, and since acquiring Redfin, they've lost about 30% of their MLOs. So they acquired Bay Equity in 2022, and in the last year and a half or so, 30% of the MLOs have left Bay Equity. And so it's why Redfin's eager to try to expand mortgage into their platform, attaching it to its core services. It also is having some challenges. But then again, Redfin is also really well capitalized, have really bright people. They just happen to come into a very, very difficult market, a lot of headwinds for them. And they're hanging on, and it will be interesting to see whether they can make their mortgage platform bloom. An interesting side note, which I actually got a lot of interest in this when Mike brought it up in his newsletter, is Better Mortgage. And I for the most part thought that Better Mortgage was nearly dead. They made such a splash 10 years ago when they were underpaying loan officers. They were paying them, a base salary, just a base salary. I remember the CEO of Better Mortgage wrote this article saying, if your loan officer earns a commission, you're being, you're stealing from you essentially. He was super vocal about it. He says all our loan officers get a modest base salary type of thing. And then he married those really low loan officer, income with committed to losing money on every loan under the guise of the only thing we care about is market share. And so Better was a leader, 8 years ago about, hey, we're just going to recklessly lose money on every single loan we do. We're going to underpay our employees. And in doing that, our hope is we buy market share and we push other players out. We all know how that turned out, not well. Now they had some leadership faux pas, which also, stubbed their toe a few times. They had horrible morale at their company. They had absolutely horrible executive retention. They're hemorrhaging money. The only thing that was really saving them is that SoftBank was their supporter and giving them tons of cash. They were able to raise a lot of liquidity while the equity markets were hot, so that liquidity has given them enough oxygen to survive. But lo and behold, they're making a comeback. And when I say they're making a comeback, I read an article a couple months ago about this time, Better Mortgage is paying competitive commissions, because what they've realized is that you need to have a talented, skilled loan officer who is motivated to be able to win in the mortgage space. So this time around, they're having fully compensated loan officers. Like, good choice. Better. That's a really good choice. And then, and from this, in their new endeavor, you're going to find this surprising. I found it surprising that Better Mortgage has doubled their MLO count in the past 12 months. Can you believe that? I really didn't think that was even possible. But they doubled their MLO count in the last 12 months after shedding over 1,000 loan officers in 2022. So that's quite the change, right? And that gets me to Better. Now, Mike didn't cover, that gets me to Rocket. Mike didn't cover Rocket in his newsletter, but Rocket most fascinates me. And it fascinates me because they are just a steady giant that every day wakes up and is slaying it. And they're this silent killer out there, potentially, for the mortgage industry. They have a new CEO who's been in position a few months, and he's awesome. Varan Krishna, I've seen him speak. He is awesome. Now, what's interesting, he's a tech guy. There's nothing mortgage about him. He's 100% tech, right? And so Rocket hired a tech leader to lead their company, which tells you everything you need to know about the future of where they think the mortgage industry is going. And Rocket's done unbelievable work kind of in the dark, that we're not all aware of. They rolled out Rocket Logic, which is an AI platform. Now, Rocket believes the digital universe is their superpower, right? And what Rocket Logic does is it does a ton of stuff, including helps in the loan fulfillment. It automates many of the tasks that most of us do in the loan processing and fulfillment. It reads documents, it understands the documents, it extrapolates data from the documents, uploads it into the LOS system, assists with the underwriting, and then sends a very well polished, finished package to be signed off to an underwriter. And as Rocket Logic replaces all these what's typically been done by humans, is saving Rocket thousands and 10,000s of man hours a year. And that gives them a competitive advantage, right? If their cost of manufacturing is dramatically lower than the rest of the industry, they have an advantage. But they're leaning even more into AI. It's just not in the fulfillment, processing and fulfillment. What's really interesting is how they're applying it to the customer experience or the user experience. And I think this next wave, which they label, it's Synopsis. And what Synopsis does, and this is fascinating to me, is I'll give you a few examples. They use Synopsis. It listens to every sales conversation. And in listening to it, the purpose is, one, it gives the salesperson feedback on how they did on the call. Right? Like, did you follow our sales scripts? Did you follow the sales process? Did you engage the client correctly? Were you asking the correct questions? Did you have good follow-up questions? Great. So it's a training tool. But it also listens to the consumer, and it hears oftentimes what humans don't hear. It hears when it has like a little comment that might not be consequential, and it converts that comment into action on how they deal with that client over a lifetime. And let me give you a really simple example. And Varun gave this example on stage. Let's say that a loan officer is talking to somebody that works at UPS, and the person is the distribution warehouse manager. He works the third shift, or he works nights. So the loan officer asks him, hey, what do you do? And he says, I work at UPS, I work nights, I'm the distribution manager. And the loan officer, of course, goes, well, how much you make? And then the person says, gosh, I make, whatever, $200,000. And the loan officer goes, congratulations, that's awesome, you're well qualified to buy a house. And then keeps going through the pre-qualification questions. But what Synopsis does is it hears, oh, he works the night shift. And then it communicates with their marketing, engagement, customer experience, platform to build a journey around that knowledge that this person works the night shift. And so they change their communication style to not communicate with them in the mornings. All sorts of things change because it hears what they said. Or if in the conversation, a potential borrower says, look, I have 2 kids, one's graduating from college, blah, blah, blah. Well, Synopsys is going to hear, hey, they have a kid graduating from college. We're going to need to give them information for first-time home buyers and why parents should support kids and first-time home buyers. And so it starts to take this knowledge, right? And it takes millions and millions of conversations that is now listened to on the Rocket platform. And it starts to create the ultimate UX that not only gives the customer the best experience, but gives Rocket the best opportunity to leverage more transactions, right? And that's how they're using AI. And similarly, as we all know, or we most like, Rocket Money is probably the best financial app out there right now. And so they're collecting all sorts of people in their funnel, from millennials who are trying to get on top of understanding finances, and they do it through an app, and they get the Rocket Money app, and that starts to manage their passwords and their accounts and all that kind of stuff, and give them advice, provide financial literacy, and then that relationship grows into a mortgage relationship or into other products. And all this is just an example of where the industry is going. That keeps leaning into different places. Lastly, I'll just really quickly bring up, I noticed in an article in Housing Wire a few days ago, or in Inman, a few days ago, that that real estate industry was confused by Microsoft's Bing Real Estate. So Microsoft has Bing Real Estate, which has been evolving into becoming a portal, like a portal like Zillow or Redfin. Now it's doing it without the correct licensing, but it's been going out and taking the feeds from different real estate portals and reposting it through Bing. And the question is, why? One, they can't do a real estate referral because they're not licensed. So why in the world are they doing it? Now, maybe they're doing it to grow traffic, but the speculation was that also maybe they're doing it to monetize that consumer engagement into a mortgage opportunity. And once again, that's just, all this goes around us all the time, but it's just examples of things that are, at our gates, trying to steal our lunch or take our lunch, and just argues why we have to be better. Now, since that article came out, Microsoft has canceled that program because they were definitely facing lawsuits, as well as they're also facing all sorts of compliance issues. So that they have stopped doing that, but we'll see. We'll see what happens. And so to wrap up this conversation, I'll tell you, so the answer to the question, which is great, to the panel about which model is going to win in the future, all 4 executives from different models, right? From different perspectives, they all had the same answer, each of them on their own. They said none of them will win. None of them have an advantage over another model. What matters is the loan officer. It's the loan officer's skill, ability, mindset, activity that will drive business in the future. The model is secondary. The model actually just becomes a method in which we can compensate loan officers. It's sometimes a method for economy of scale. Like, the model's successful, you get economy of scale, you get more bells and whistles. If the model's efficient, you maybe get more revenue, more income to the loan officer or to other parties in serving the transaction. But in truth, it doesn't matter. And I'll end with this. And I remember I was on a round table a few months ago, and we were at the time, and maybe it was a year and a half ago, I don't remember. At the time, the question was, what's going to be the impact of brokers? And most of the panelists, most people on that panel were really dismissive of brokers. Like, hey, they're just low price hacks working from their trunk of their car, and which is total nonsense, by the way. And my point there, and I'll finish with this point, is if you think of the best loan officer in the country, whoever that is in your mind, whoever you idealize as the best, if that person's at a bank, or that person's at a credit union, or if that person's at an IMB, and they chose to shift to a broker model, listen, they're not going to suck because they went to a broker model. They're going to slay it because they're a great loan officer. The broker model doesn't matter. And that was the point of these executives. It doesn't matter. What matters is great loan officers going out there and slaying it. So with that, I want to thank everybody for listening. I hope you got something out of this. By the way, I posted Mike Delprete's newsletter on my LinkedIn this morning, as well as put some comments on it. I gave you a link to his newsletter. So go to my LinkedIn, check out the post, click through to Mike's newsletter. I hope you guys have a great day. I'll be back about the same time tomorrow. Thanks. Bye.